So this is the weekly chart of an S&P. Okay. We're not looking at the monthly. We looked at them before. So what do we have here now? We have six higher closes. One, two, three, four, five, six. Okay. This is the year low. This is the year high right up there. Clean this thing up here. Okay. So let's take a look at this year. We had 6% drawdown. Okay. And we had 9.7%. Let's call it 10%. So we have 6% and 10%. We have two corrections this year. And then after that, market just uh, start rallying back to the upside. Last year, okay, so we're still up at 26, 26% here, and we're at 25.55% here. So we're almost there, okay? And then last year we had 10% here and 10% here. So we have two of them, two corrections last year. And this year we have 6 and 10. So now if you notice that 10 has been repeating often, right? 10 here, 10 here, 10 here. That three in the last since last year. And this is the smallest one that we had for 6%. So your average is almost what 10, right? Because it has happened three times in a row. So what I'm gonna tell you now is this is your first correction. Okay. This is the second correction that happened right there, right at that top. You take the top of that price projected from the low of this previous correction, it gives you the retracement, okay, is where you would expect the next correction will come whenever it's going to come into a play, where might it make a stop? If we take a last year, we're not using fibs from the top to here. This is a different way of doing things. I'm going to show you a price in a way different way. Okay. What you're trying to do is you're trying to measure two corrections from peak to trough, not the bottom up and top. Okay. So from this high of 46.05 down to this correction of the previous low of 10, the price came down at 61.8% retracement. And then from here, the price rallied right back up. Okay. That's one. This year, okay, you take the same first correction. This is the low right there, 49.57. And you take the high, which is 56.66. So this correction stopped right at 78.6, right there. So this one was at 61.8. This one was at 78.8. Okay. I have my low here, as you can see, right there. I don't have my high yet, because high will move where we make a move. But I think that the next correction when the market will gonna have, I don't know when, it's gonna take several weeks. It's not gonna happen in one single week. Now you look at a time duration. This 10% correction took 4 weeks. This correction right there took 4 weeks. You take in the high of this one, you can just put a high here because there was almost a double top. So just call it either a 3 or 4. So it really doesn't matter. This one takes the longest one. Took the longest one, almost 13. So you got 1, 2, 3, 6, 7, 8, 9, 10, 11, 12, 13, 14. So from this high right there, okay, which was July high, to here is 13. And then this one right there, you got 3, 6, 7. So you have 7 weeks here, okay, from the high to low. Now, now the thing is that we're up 6 weeks in a row. Last year, we rallied 9 straight weeks. Okay. This was a 6 week right there. So you have 1, 2, 3, 4, 5, 6. So the sixth bar right there, weekly bar, that has that green arrow right there, which matches this one. So then after that, we have 6, 7. So we have 7, 8, and 9. And that's where we ended the year. Okay. That's where we ended the year right there at the high note. And then from we started the next year right there at the bottom, you can see the January come into a play. So from January, then you have, because this is a weekly time frame, so you're going to have 4 weekly bars to complete 1 month. Okay. And there it starts your February. So you have a down week, then you have 3 higher bars for January of this year. And then here's your February right there. You count 4 more for February. So for each month, you just count 4 weekly bars. So I have this, okay, the low right there where we have our last correction that we had in the market, which ends here. I don't know the starting point yet because I don't know where the top is, right? If we do, because what I see right there, that market is what S&P is right now. 22.95% year to date, right? I'm not saying that it's going to be a complete flush. I mean, it will take several weeks because we just looked at the time right there. You see, that's like almost like a month of selling right there, right? It's 4 weeks. So you take 4 bars to make 1 week, 1 month, sorry. So you just have to put, first of all, 3 lower bars in order to flip the swing to the downside, according to the Gann. And it's just a matter of like, do you see that we're gonna have 3 weeks of selling that that would flip the swing, the 3 bar swing to the downside? I don't see that. Why is that? Because we have a higher monthly bar and we just have to wait for these earnings. Okay. So if we just looked at earnings, there is not big market mover earnings are going to be next week. They are due for the following week. So basically what we're doing, we're just going to buy time, right? So we have what, 2 weeks to go, right? So next week, there's not that many big macro leaders, you can call it, that will move the entire market. Can you rely on Tesla to be the market mover? Absolutely not. Never been, never will. Okay. So either it's an XLY stock, one of the top holdings, but it's an S&P 500 stock as well. But that doesn't mean that it's going to shake out the S&P 500. I said this thing many times before. You want to make a bear case in the market, you need to hunt down the tech sector. You need to find weakness in tech, not an S&P on its own. Because you have value stock that could lift up the Dow Jones Industrial to the upside, that will lift up the S&P as well. So no wonder S&P has more return than Qs these days. The SPY has more year-to-date return compared to Qs because it's getting benefit from those value stocks, the blue chips and stuff. Look at IBM. It's a rip into the upside. I don't know. I mean, look at Adobe. They're dying. The blue chip stocks. Yeah, I mean, for why do you think the Warren Buffett spends on blue chip stocks? Um, so the point here is like 50% retracement is 5,500 to 61.8 to 78.6. So it really doesn't matter from here that, well, I don't know where the top is. If we lay out 5%, that would put us into this 38.8 to 50% zone right there. That would be the 5. And then if you stretch this thing out to 10, that'll put you right there. You see what I just showed you? This and this is going to be your next bottom for the market whenever it's going to roll over. That's where you're going to buy the market again. That'll be one of your excellent buying opportunity. That will come into a play eventually. But hang on one second. So hang on one second. I gotta. Okay, so this is the range. But can you see that S&P is cutting down in half in the next 2 months? If we do get the election shakeout, this is so it will be just 1 week because you would just take the election um, November, a 1 week of a weekly bar, right? So you have to pay more attention to the time frame. Okay, this is 1 week. Okay, compared to a daily bar is going to be a smaller time frame. Then you go to an hourly chart, you're going to have 6 bars per session. So oh no, this I just manually measured these moves from the high to low. This is what we had. So when you have an uptrend, you look for corrections, right? Every uptrend will have a corrections along the way. So I'm not saying that we're not gonna get another 5% or 10% drawdown. I mean, we will be eventually due for 5% minimum to the downside. That's healthy for a market. And so then um, again, nobody knows that. And I'm not telling that here's your top and here you start buying it, you position yourself down here like this. No, I'm just I was working on this one. And what I was my what I wanted to show you was this, that these two prints based on 2 years. That's a lot of this is a lot of price data right there. Okay. In 2 years of looking at prices side by side, there would, I mean, I don't know. I mean, you don't need to go to 1950 charts to make a case for, you know, yeah, I mean, it will move. But all you have to do is you can do it this on yourself. Write down this low right there. Okay, use that low only. Don't use any other low. I'm gonna just give you this low for the the August low. You keep the August low, okay, for now, which is this 51.19. All right. Don't worry about any other lows yet. Just focus on August low because this is where you had this is where we had our biggest correction of this year. You take the August low, and then you just have to play around and see how much of a room that you can make to the upside. Because if these fibs gonna move up, so does the bottom one. But this low will remain as is. Okay. So if S&P goes up to 6,000, if I stop them right there at 6, and then 38.2, 50, 61, and 78.6. Nobody knows that you're gonna come and really hit that number, the print to the penny. Price can just stop right there. It can stop right in the middle. We don't know that. But if that time will come, I will see how the swing looks like and what the prints that I get, and then I will know. I mean, but I cannot just sit here and make a wild guess that, oh yeah, S&P is gonna come down to 50 as soon as we're gonna hit 6,000. This is what most people have their mindset. Oh, S&P is going to 6,000. If S&P is going to 6,000 for everyone, S&P is not going to hit 6,000 this year. I can tell you that. It can if everybody wants what they're like they're talking about 6,000 S&P going to 6, it's not going to 6,000. It's going to stop somewhere around here, 50, 60 point below 6,000, just to torture that level, not to give the level to anyone. Because why? Because everybody's chasing that 6,000 print. It could, but most often doesn't happen. If everybody, if all the bulls out there have a $6,000 price tag on S&P, you're not going to get the 6,000 print. They'll stop them at 50, 60 point, 40 points below 6,000 number. They'll just torture you there. They'll just end the year. You know, like the year high was 47.93. Okay, I'm pretty sure a lot of people had a $4,800 target. Did you hit 4,800? No. He's about to die. The same thing happens here. So it doesn't mean like that if you buy 6,000 calls, if you had a mindset like, okay, yeah, I can see the S&P can run to 6,000. Yes, you can capture a lot of upside from 58.64 close to 6,000. You don't have to hit the 6,000 to the penny, but you can get 60, 70, 100 points to the upside from here, from 58.78 to 59.78. Let's say 100-point move, right? That's a huge move. And how difficult it is to catch 100-point move in S&P. That's almost a one standard deviation move. It's very, very hard to catch 100-point move. 100-point move with 10 deltas is $1,000. Now you do 50 delta play with a 100-point move, that's $5,000. But to catch 100 point, because where you have the market can take a pause, like for the last 2 3 days that we just had 10 points, 11 points. Oh yeah, those just then there comes your beautiful time decay on you every single day. Now the market is not moving. It's costing you money just to hold those premiums. So we don't know that, but the point is you keep this low. Just remember this August low, and we're just gonna have to play around and see how much of an upside that we have. Okay, and then if you wanted to play, but it's extremely volatile session like election, like I know that we're gonna have the election volatility is coming and we can just rip right back up. And if we do have the downside, whatever the high is, you can take 23.6 fib print. That's gonna be your put. you know, that's basically what 5,700. So 570 would be in a SPY quartz. For S&P would be 5,700. So you can see like, okay, if the price is going to come down, we'll come at least to 23.6 minimum, right? So that would be your first downside target. But again, you need a pretty good size bar like this. One of these huge ones, like this one, to the weekly bar. The size is pretty big. I mean, you need something like this. Yeah, you toast. Like these ones, this one. You see how tiny they are? Like this is the big one right there. You can see the body of that candle is like this one has nothing. Like you see how aggressive selling it was right there back in September. Look at the high here. Look at the low. Look at what the close was. Look where the open was, and just rips right back up the next week. That's crazy right there. That's what you call one nasty reversal, one week straight sell off. Next week you didn't make a new low, you open right there, you just rip right back up. This is where we started this 6 weeks. 1 2 3 4 5 6. That I believe that was a CPI day or whatever that we had that reversal. Market, the bottom line is, okay, market is an uptrend. So don't fight it. And the question is like, okay, so we're up 6. I get that. But we were 9 last year. So we did 9, we can do 9 again as well. Remember, market is fractal, right? So there is a pretty good chance that for the next 3 weeks, we can just literally just repeat this thing. So I'm watching. I don't have any position to the down. We did play puts on SPY. That was a small play. I'm taking puts, as you know. I had SPX that I did a put to the downside, and I took those few couple those SPY puts. So I'm trying to counter trade small plays to the downside just on a smaller time frame. But based on like going out for like 30 days and 35 days and just to position myself like this, that's tough. You know, that's just a tough bet to make. Because I don't know where the top is. And I don't want to open up a spread or buying puts here and just hold my breath for the next um couple weeks. Because you have a clear uptrend, right? So why would I sit and fight that to the downside? Because why? You have nothing better to do just to burn your cash. Here's your daily swing right there. Up, up, true, true. So If your swings are up, does it really make sense to buy puts? Because a guy is showing on a Twitter that there is an inverted yield curve. Weekly time frame. All swings are up. Monthly time frame. All up. So where do you where do you see a bearishness in this market? I mean, the point is like if I go here now, I can put one here, I can put one here, you can just make it the way you like it. Okay. But you don't do none of that. This thing is not gonna do none of that what you can do on an Elliott. I'm not saying Elliott is bad. I mean, I love Elliott wave. Okay, but I need my confirmation from here for me to make the case here. I know how my system works. I know how I built it, and I know how it works. And it works. You all know that. I mean, I'll make this wave count for everyone who wants to see it. But counting these smaller waves, these degrees right there, this sub-micro, micro, sub-minute, and minute, and this minute, good luck. You need years and years of experience to count these ones. Nobody out there knows how to count these. I never seen one on Twitter. I do sit and kind of see what is trending and how people are doing it. There's nobody out there knows how to count these. People know how to count this and this, not these ones. Okay. So most people are out there that trading based on intermediate to a primary. And there are some genius out there calling cycles. What you looking at here, these, this, I do as best as I can. It's this. So I'm between these two right there. I need to make 5 of these to make one of these. Okay. So from here, I did this thing last the yesterday I did the update. Here's the thing. Okay. Forget about all these smaller minutes and sub-minutes waves and all that stuff. Here's your August low that I was talking about right here. So whatever the top is right here, let's assume this is the top. You draw your fibs from here to here. Remember, we're gonna look for that correction to unfold over the weeks. So what are we looking at? Look at where 23.6 is sitting. If we use this high to where? To the other most important support. This market has no downside, or any kind of a bigger steep correction unless the price breaks and close above this support. I can tell you that. You're not going to break this one that easily. You tried here many times, as you can see. You tried multiple times here, right here. And then what happens? Rips right back up. This is a very good, healthy sign that you get the breakout for a major resistance. Why it is a major resistance? Because it's where you have the biggest correction of the year of 10%. These are all small ones going up. This is the biggest one. So if you sit and thinking that I want to put my money on the board, so let's assume that you position yourself all the way down here to say like, okay, you know what? I see this market to at least come and retest this support. You gotta go all the way out of the money to buy something and hold your breath. You might get lucky because you're trying to test this thing. And how many times this thing was tested before? And what you're trying to do is what? To test this, and then what happens? Bounce? Or we're just gonna have that steep of a sell-off. I did. You can just go see him. And then to break this support, and then you just have to see like, okay, you know what? And then you're gonna get down to 38.2. It's the point is like, you need weeks and weeks of selling. You need aggressive selling is to turn this thing around. Not like one or two or like couple sessions sell off. That it's not gonna define anything. Just remember that. Okay. You want to take a counter trend, you try to stay as close as possible to the price, and you see if you can catch a couple points to the downside. There's no drawdown like I could make a full case like, yeah, just I'm gonna make all of you to put money, position yourself here. No, I would never do that. Why would I fight a trend? You shouldn't be doing it either. Ride the trend. You don't fight it. When we see signs like, okay, here's the thing. You measure this move to your wave two. Where's the 100% sit-in? 59.64. That is your minimum upside. Taking this August low to this high swing. So this, you have a high here, higher low, and that's your higher high, right? So your measured move is 59.64. You had what? 58.64. The high is 58.78. So there is a little bit of a pocket room. There's this room left to get to at least 100%. Because this is where at least I can put this 3 here. If I'm running my wave count, I need your third wave must be at least 100% of wave 1. That's one thing. Now we skip this portion. Now we take this swing from this low. You use this low, they're really close. So just take the very low right there. So you take this swing. Now in this swing right there, the biggest retracement that you have is between this high to your previous support right there to your major support. We tested here to this 56.74. His line is where 23.6. This is where we start making higher highs. So if we take this swing from here to 100%, is at $6,057. So this pocket zone that you have up here, right here, use a different color, right here, is where you have, this is why well, I hope you saw it. Like yesterday, I posted that thing even on Twitter as well, that I'm showing you these 100, 100, 100% upside numbers. It's well, in order for me to satisfy this wave count, I need at least 5964. I cannot put 3 here. It's not gonna work. Your wave 3 is shorter than wave 1. Wait a second. Okay, so if you do that, well, how are you gonna go up? And when did 3 has ever become shorter than 1? And when does that wave count has ever played out, going up? Never. It will never work. Wave 3 cannot be the shortest wave in the entire trend wave. Motive wave, 1, 2, 3, 4, and 5. Third is the longest wave. It cannot be the shortest. So I need at least, okay, to satisfy this account to 5964. So from 6954, we're looking at 1.170. So we're looking for 1.70% upside. You know, so the thing is, like, the way I've had this thing labeled is, so you had 1 here, down into to the support. Here's your 3, 4, 5 to make 1. This was the 2. And now you take this 1 to this 2, you're 100% at 6,000. But you have to hold this low right there, which is this 5804. This is what I marked this thing down for you at 5804. So this 5804, and you have a support here, which is 5767 at this high, which is, so I'm using this as 1. This has a projection to $6,057. So this zone right there, okay, this is where I see that is where you're gonna have a bit of a setback. I think this market has more upside to go, but to make this wave count work, if market tops out here, okay, right here, then instead of counting this thing as a 1 2 1 2, it's gonna become some sort of a diagonal. So I cannot. It has to be look something like this. Well, I'll show you an example. If this 3 doesn't reach here, if it stays around here, so you're gonna have 1, 2. This is gonna be a 3. Then you're gonna need an overlap right there with your 1. That's where this support right there is gonna come into play. You will need this overlap. You're gonna get that false break to the downside in 4. Then you get another rip right there at 5. So this thing right there is gonna shape like this. Every time when you're gonna have a shorter third wave, to all the way up to the top, and then you roll over, you're gonna have a very good chance that thing is gonna have you cannot have a 3-way move in 5. That's the beauty of the Elliott wave, because the wave 5 cannot be a 3-way move. You need 5 trend waves. You cannot say like, okay, yeah, we completed 5 here. Okay, well, how does that ever have, how can that can work? You need 5. So the fifth wave can be motive, okay, meaning like 1, 2, 3, and then you get the 4 and you get the 5. So you complete your 5 waves. Okay. It's the same thing here. All these ones right there. 1, 2, 3, 4, 5. So this is where you have a way shorter one. You have an extended fifth wave. It happens. I mean, it's totally fine. When you have a shorter one, you have an extended fifth wave. When you have longer one, when you have a longer, your wave one is longer, then your fifth wave is going to be shorter. Because your fifth has a relationship with one anyways, because they're both of them is going to be motive wave. Fourth and two are going to be corrective wave. These are the ones that move against the trend. This one is looking really, I don't really like the look of this. This is this crazy look compared to this, but there's no other way to count it. I cannot put one here that makes it a three-way move. But the point is like, as long as but that's the low, and higher low. This is good. Okay. But not with, you didn't made a new low. So that you can make this thing work. As long as the price don't take out the previous low and then takes out this high, that's the low, that's the high, correct? This is the higher low. And what you did here, you took out this high, that becomes a higher high. Then you came back down here, higher low, because you didn't take out this low either. So this too is fine. But the only thing is this, that it chewed a lot of time compared to this. That's all. But then the same time, the same thing, when then the fourth came into a place, it did the same thing. It kind of went like this. This one is kind of like went to an ABC, more directional, much shorter duration time. And then from here, it goes right back up in 5. You have extended 5. This is fine. This is all good. I know how to count. I don't need any help. So this is all good. So so this is the zone that we have. So we're fighting for 1.7% upside from here. At least get to 59.64 to satisfy this. So do we just go sideways next week? Or we just take a bit of a 1 week down week? It's just to end that 6-week winning streak that we just looked at right there. So if we going to end this 6-week winning streak, what do we need? We need to break 58.04. As soon as we're going to break 58.04, we're at 58.64. Okay. This 6-week winning streak will be over. So if that happens, does that mean that that was the top? No. Well, I can call the top here, but I'm not going to be able to call the top here. Why? Because I'm short. I need to satisfy this account, this wave count. If it's going to at least get here, and then we fail, then I can at least put the 3 here. And then from here, we're going to deal with this fourth wave. That has to be it has to stay above this high. You see how well defined Elliott wave is? If you really study and if you really pay attention to it, it's the one of the most amazing tool, okay, you could possibly ever learn and trade from it. There is no strategy or any tool in the entire market. There's thousands of them. Okay. There's 1,000 different ways that you can trade the market. That has the well-defined risk to reward ratio. Elliott gives you that edge. Not no no other strategy out there will define where to manage and put your stop loss. And the Elliott is so fractal because it's a repeating pattern. That makes it even more interesting. That people talk about market is being fractal, this and this. Yeah, of course it is. But Elliott is way more fractal. You know, you have 5 up, 3 down, 5 up, 3 down, 5 up. It's just a sequence. And when that sequence breaks, this is where you're gonna complete one of your degree cycle. There is no strategy out there that you're gonna like. Then it has rules and it had guidelines as well. The rule that I just the one I just said that the wave three is the longest wave, right? It cannot be the shortest. So if this third wave, okay, doesn't get to 5964 minimum, at least it means this what? It doesn't satisfy this wave count. So if I put this three here, so there's ways to count it. But again, the point is I just made it before. There's nobody out there can count these micro, subminute, and minute, and minute. These four. I challenge you. You count these fourth waves, these 4 degrees on a 1 hour chart. This is easy. Right there. Sorry, this higher degree right there. It's minor because I want to complete because you have 4. Okay, your 4 is what? Intermediate. So what do I need to do? I need to fit 5, okay, to complete the sequence of intermediate of 1 higher degree of 1, or 5 to complete this intermediate. Because the fourth wave, I need 5 smaller waves from here. So I need 5 minor to satisfy intermediate 5th wave. So this is what I'm at. This is what I'm fighting to the upside. And when this intermediate will complete, 3, 4 will complete 1 primary, which is here. One, 2, 3, 4, 5. That completes 1. So the 1 hour chart that you're looking at, okay, this is what I'm working on from this August low right there, is to see if we can count this, get to this 3. So this 3 right there is the same 3 here, right there. Well, I had it up there because I wanted to see if we can make some room to the upside. It's because the third wave has to accelerate, it has to move. So we need to go kind of crazy to the upside. That's what I would, because I want to make this wave count work. Because then it has to leave some room for this fourth to breathe. Because if this third would ends here, here in this zone right there, then you're gonna have, then I'm gonna put a hard stop loss right there, 56.51. Now this fourth wave, whenever this third ends, cannot retrace below, cannot go to the origin of wave one. It has to stay above. And so name me one strategy that can gives you this. Where you can well define your risk. If you're wrong, if your wave counts satisfy all the rules and guidelines, okay, and the Elliott tells you where to put a where this entire wave count will be wrong. Do you think is a perfect way to manage your risk? Because every other thing that you're gonna do, you're just blindly guessing. Okay, I'm gonna enter the trade here. Okay, where you gonna put your stop loss? Here, here, or here? So I hope, I mean, look, we don't have any data next week. That's one thing. Second thing is that there's not any wild monster earnings coming up either, as we know. They're all up for the following week. So I'm technically not expecting much. Might be in for another 15, 20 point choppy range. The market has been choppy. Just the way it is. I mean, we the no. I mean, yeah, we got the upside, and yesterday was an inside day. Qs was the inside day. Look at the range from 493.30 was the low, and the high was 495.57. That was the range for yesterday. SPY range was 582.58 to 585. It's tight, you know. The IWM managed to put a higher bar, like pennies, just to make it green. And then this one right there, or an outside bar, again on daily. I'm seeing a lot of outside bars on Dow lately. There's one here. That's for the doji right there. And this was an outside bar. This was an outside, but this one is getting there. Like it's this, I'm seeing a lot of them. I don't know if just it's just the signs of exhaustion. It's just basically what it is because it's considered as a undecided bar because you have a high and a low, and not this one. Sorry, the this one of these blue bars, the outside bars. So I know there's so many earnings are due. So okay, what question do you have? Oh, here. This one, yeah. I gotta unmute you. AV. Let me unmute you and then you can.
Yeah, can you hear me?
Okay, now I can hear you.
So, is there any possibility the red three that you have there, the red three on your chart, is actually where the red 5 is, meaning you're still in this blue 3 count. Is that a
Oh, you
possibility?
just want to stretch this one to here?
No, 3 red to your blue 3. And then is that possible within EW2 rules?
So you try, okay, repeat one more time. So you trying to put,
Blue 3 in parentheses, right?
Yes, that is not even completed yet. What I'm saying is the 3 has not even completed yet, the blue 3, but your red 3 is where your red 5 is, and your red 4 is where your blue 4 is.
okay, so you trying to extend this third to more to the upside?
Yes, I'm asking you about that by saying that the red 5 is actually the 3.
No, because the reason for this, because you have a 10% drawdown here. That's your largest correction, and this is your largest correction for this year. We have two, right?
Yeah.
Corrections are always going to be four, wave four or two.
So the blue 4 cannot be a red 4?
This is brown.
Oh, sorry, brown. The blue 4 cannot be the red 4?
Oh no, there's going to be it's going to be, if I put this 3 here,
Yes.
that's what you're trying to say, and then move
Yes.
this one down here.
Yes. Is that possible by EW2 rules or not? That's all I'm
Yeah,
asking.
you can, but I just gotta have to recount this thing to see if I could fit 5 here. Okay, because what happens here is, I gotta change the whole thing. If I move this 3 here, that's what you're telling me.
Yes.
But this is a one smaller degree. So if you're gonna count 1, 2, 3, 4, 5, okay, you can do it, but the point is that this wave 3 putting by 1 here, no, so if I do this, see this wave 3, right? If I put this like this, so here's your 1, here's your 2, and here's your 3. You see that 3 right there? It's even shorter than 78.6. It has to at least satisfy 100% relationship of 1. It's way too short. So if you put a 3 here and then look at the size of this 4 compared to your 2, it doesn't satisfy that thing. And it's not going to have the right look. And then look at the monster 5th wave. So how are you going to use like the channel, let's say, like to connect one, how are you going to connect like the channel doesn't work either. So if I put a 3 here, you connect 1 to here and look at the channel here. Look at this. So you travel this much out of the channel on the way up. It's just not gonna, it's not gonna work that way. This one is, you have, extended 3. You could have third wave that can extend insane. So your third wave is right there. So every time when you have a 1, 2, okay, your third wave has to get to at least 100%. According to Elliott, they use the golden ratio, okay, of a third wave. The stoppage point is 161.8. This is the ideal target for the third wave. If the third wave can stop anywhere, can stop here, it can stop here, it can stop in the middle, it can get to 200%, it can cross 200% as well. It can get to all the way to 261.8. So it can run. This is This is this is what you want. It's the third wave. Okay. So some of them can even extend above 261.8, but you don't really break 261.8. If you get to 200, your indicator is going to be start going RSI and stuff. They're going to start showing you some reading to the upside. You're going to get extremely overbought when you're going to get to a 261.8. And I can show you if I have that. Where's my RSI? Here. So what do you use? 14? You see? See all this? See how overbought market was right here? See, when you come to 200 right there, that's your 200 right here. You see? This is why I don't track these RSIs and stuff. Then what is that thing is doing? Nothing to me. I can prove you any indicator, any divergence on the indicator on fibs. I mastered these fibs. Okay, let's put the thing in your head. This is how I trade every single day, and I give you guys the same exact prints. Okay, set this price alert. This is the print we gotta hit. That's our target. We hit them and we're out. Those are fib swings that I run from several swings. I make those targets. Well, you in a trade, you have a target, right? If you hit your target, you're good. You're out of the trade. It was a good trade. If you don't hit your target and it goes against you, you just cut your loss and move on. I mean, there's no other way to look at it. I mean, it's not an easy. I mean, it sounds easy, but you're gonna put all the work. You're not just gonna come up with these prints by thinking about it. How are you gonna come up with a print of 4473? You're gonna come up to 45, but how can you come up to 4473? These are very hard to get to these these prints almost. Look at this. Look at the low, 4103. Look at the fib, 4096. Let's look at the upside. I mean, the point is like you gotta know how to count, because these fibs are 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 excellent way to trade, but you gotta know what you're doing, and you're not gonna. Yeah, yeah, you should be right up in the front desk.
Inside the bay.
Yeah, in your card.
Can you go inside the store?
Yeah, to the front. At the front, you're gonna park the car. It's gonna be sitting right in the front door.
Oh.
AP. Um, so this one right there, like would you take it 1, 2, 1, 2? See, it's satisfied. And then if you take this third wave, you see, almost at that 261.8. This is where we're pretty overbought. And then what happened? We took a 10% drawdown. This fourth wave, see this third wave here satisfied the third wave. As we know, third wave is the longest one, right? And the entire trend wave compared to one. And then the fourth wave came, and look where fourth wave ended, right at that 23.6. And then it could come down to 38.2 or it goes to 50. it could fall more, but it just stopped right there. 51.19 was the low. 23.6 was at 51.61. I use 78.6 against this low right there. And this is where we have a major support. I was like, you don't want to crack 78.6. We're going to be in trouble. And then from here, market rebound. And here we are. So now the thing is that I was talking about, how are we going to complete 5 waves of this 5? This is where we at now on the wave count. Okay. So this, whatever this third will end, okay, this 4 right there is going to come into a play. That would move against this third wave. So whatever then fourth is going to come into a play, this is going to be our stop loss. You know this, and I know this, that Elliott with the 5 waves off of 5 cannot be a 3-way move. It has to be 5. So when you have a leading diagonal in wave 1, okay, so let's do this. 17.44%. 17.44. Okay. 14.83. We're not even a measured move to the wave 1. The equal distance is right there. Right around it is 100%. Actually, what was that number? Forgot. So you take 1744. I do this thing on optimize better. 1744. There you go. Right there. 5. Okay, I'm so blind. Right there, 5 versus 1. I have it. I'm just not even paying attention to it. 6,012. That's the minimum upside, the relationship of 1 with 5 works. They call 5 versus 1. Either now, Elliott tells us that we're going to have a 5, looks like 5 to me, unless we roll over like this, then we just have to make some sort of a diagonal. Because anyhow, because right now, what most people are doing is this. I'm pretty sure you saw it on the Twitter. This is what they're doing. They're showing everyone these wedges. Yeah, good luck connecting these highs and lows. It depends how biased you are, that you want to convince everyone that this is it. This is what everyone is showing. Like this. Go on Twitter, you're gonna find plenty of them, plenty of those technicians out there. They're showing you like this. Let's assume for a second that this happens. So what do we need to do then? but they're going to be very nasty to trade. Let's assume for a second that this thing comes in play. Three ends here. Here comes a rollover. If this rollover comes here, remember, we need to get here. Okay. The only way you're going to get here, then we need 5 waves. This is 3. Doesn't satisfy that. Okay. So you can make the case of that thing. So that what comes to this. Now this 4th wave, if this 5 waves are going to complete into a diagonal, then it has to come back and overlap this thing, this print. Then you connect this, and then it's going to have a look of a diagonal. Then you have to make a room here for 5th wave. Then you can get your one final push to the upside to complete 5 waves. See, this is the thing about Elliott, though. You're going to break a rule, Elliott is going to come back at you. So you could do this. This can happen. There you have a 3rd wave, smaller than 1, shorter than 1. Sorry. And then you have the 4th wave is going to it has to overlap. And then you're still going to be long. So it doesn't matter. You take a breather here for 2-3 weeks. Okay. Either we shape up into a 4th wave, then you still have more upside. You're not gonna see, look at the channel that you have coming from your bear market low. I mean, you're right here. If you just connect these just to take the high of 1 and just connect with your 3, okay, which this is the channeling technique that you can use. You connect this one connected with the 3, that way you have the 10% drawdown. Look how much room do you have to the upside here. This market has room. Don't fight it. If you want to play a short lotto or something, like some puts, whatever, yeah, you can do those. I mean, but it's very difficult for me to position something for 5, 6, 7% drawdown. But I just don't see those signs, you know. I mean, eventually I will. Don't get me wrong. I'm not saying that this thing is gonna go off whatever. But I need this screen to give me the green light. Then I'll make the case on the wave count. That's how I trade every single day. I take these odds, plug them into a wave count. When Gann and Elliott work side by side, your winning rate is going to be very, very high. I can tell you that. Because they're 2 different strategies. It is nobody out there can do this. Optima knows that. Because they are the one who does all these swing trading. They don't know nothing about Elliott wave. I merge them. I know Elliott, so when I start learning about swings, it's just a piece of cake for me. All I'm looking for is higher high and higher low. And I can just count. It's a blank chart just in my head. I don't have to sit and fight my life over this every single day. Put 1 here, 2 here, 3 here. That's just, I mean, I hate it, you know, because it takes a lot of time. You know, I gotta go like this. Okay, here's your wave 2, and then you have your 3. See, 261.8. There's your wave 4. I mean, I'm just keep looking at these ratios to see like, okay, yeah, it fits right. And then you run wave 5 upside. You know, same thing. Leading diagonal, extended fifth. I mean, I know how Elliott works. I've been doing this thing for 18 years now. I know which wave has which relationship. I have a pretty good feeling a lot of time where it could stop, you know, and doesn't mean that you just, oh yeah, I call the top. What kind of a statement is that? I mean, you predicting stuff. Like, what does that even mean? I mean, we're trading the unknown, right? We all know that. Future is not written. There is not a single person in the world knows how the market will open on Monday and how it will close. So yeah, I mean, upside projections are normal. It's the same thing when you have your company is giving you guidance, they have their upside projections as well. But are you gonna meet those projections? That's where you're gonna make your money. Okay, my target here is 59.64. This I'm just taking this August low to this high to this low to at least get to 59.64 to satisfy this at least a wave count. Now, how are you gonna get there? This brain damage right there is gonna come into a play. Can instead of putting one here, can this be all one? Yes, it can. See, I can count many waves. This is a clear 5-way move. It doesn't matter where I put one here. I can just put one here, 2 here. So this 1 comes here, this 2 comes here. So that's 1, 2. Make this 3 here. This is a 4, right? And then from here, I get here to the 5th wave. That's it. I can at least get to this 59, but then I can move this 3 here. And now I have 5 completed waves. Leading diagonal in 1, extended 5th wave. I can change that. But I'm not going to show you this every single day with a different labeling. And you're going to be sitting scratching your head. It's like, Mo, wait a second. What's going on? Where are we going? The point here is that these are the most difficult and challenging waves to count. Because I can show you this thing in so many different ways and you will be confused. And I don't want to do that to anyone. I know what how much how I can change this entire thing in 2 minutes. It's still going to be a 5-way move. It's just a matter of like, can we, okay, if we leave one here, does it said, do we satisfy a 5-way move here? Of course we do. Can we start 1, 2, 3, 4, 5 the way I just showed you? Yes, but we need to get to 100 because this swing right there has to at least get to a measured move of 100%. Okay. The same thing here on IWM now. I have these every time when you look at the wave count on the chart room or whatever, you have to pay attention on 2 fibs, 100, 161.8. Okay. So if you're long with me, or if you took a trade based on a chart that I showed you, you should be as where you saw that 100 number. And if you like that stock, you wanted to stay long, you got to put a price target on your chart right at that 100%. You can make it even. Let's say this is 230.94. Just leave them at 230. Okay. If you leave put a price alert on. So like, okay, this would be my minimum upside projection, my target is to satisfy my wave count, is where I could potentially book my profits. And if you are in for a long haul and you say like, hey, I see the trend is strong. I see there is more upside. Things are not looking bad across the board or whatever. I see like, okay, and then you can see, you can make, you can stay long and you can just capture more upside if the trend resume. But trend always going to take a little bit of a pause as soon as it's going to hit the 100 mark. So how we got to this 100? So I showed you the same way on S&P, this zone, right? Using those high and lows. Now we're going to do the same thing here. 1 here, 2 here. What's the minimum? 3. 230.94. What's the 100% relationship of this swing? 236. So I posted this thing on a Twitter as well, and I drew this box here. So this is our zone. We'll get to 250 when we're going to get to all-time high. There's no point. I mean, I laid it out there just to kind of tease everyone like, okay, yeah, if we take out this high, that will be our next upside. So we got a long way to go there. But in order to satisfy just the swings and the wave count, it has to get to this zone. If we fell short here and then we just rolled over and we just take out this low here, okay, so what do you think is going to happen? The wave count is going to change. Why? Because that's your high, higher low, higher high, because we take out this low, right? See, we made a new high, came back down here, higher low. Now we did what? So these rats are running good. Okay, so what is the bullish trend? Beside Elliott, you need higher highs and higher lows. What is a bearish trend? Lower high and lower lows. That's it, right? What's the third way that you can trade the market? There is none. Well, you have sideways consolidation. That's different. But there's only 2 ways the trend works: bullish, bearish. So if you have a market in front of you is making higher highs and higher lows, it's not taking out these lows, but you're bearish, so you trade against the trend. That's what it means. Trend is up. It's clearly making, you can see, is making higher highs and higher lows. But you're willing to bet against that, saying like, oh no, we're just gonna start making lower lows and lower highs. But at the same time, the screen is telling you totally something different. That's why I always tell you guys that you have to trade what you see, not what you think. You can think whatever you want to think. It doesn't mean anything. You can sit and talk to your friend all night. Talk is cheap. We all know that. You trade what you see right there. Okay, so in the same thing here on IWM, we just I've had 1, 2, 1, 2. So it's satisfying, like like the wave count looks good, but if you can just I don't know if this is all of 1, 2, or we just completed 5. Now we're gonna come back down in 2. And then from there, we can make a move up, but we need to take out this high right there to this 228. The 228 breaks, then we got to get to this 230.94. This one will satisfy this swing, and then this one will satisfy this one. So this is the zone that we have to the upside between 230 and 236. As long we need to hold this low. Well, if we break this low, this is why I put the invalidation here for now. I mean, it should be a little bit, move up a little bit more, slide a little bit more, because we don't know where the second wave is. With it's gonna start. The only way it's gonna start when I'm gonna see a lower bar. Then I could make a case of a second wave. But there is not for Friday. Friday we put a higher bar. So plus it has this little green arrow as well as a buy signal to the upside. So we're good. 23% upside. Not bad. You know, it's not bad at all. But the point is like that there's one thing that I'm in a trade, okay? And you can see it on I mean I'm updating you on logbook what I have it open, what is closed. But then you not in the next day or third day, whatever. Well, then the price pushed here from here to here. Now you asking me a question. Can I buy it at 197? What does that even mean? So if I enter a trade here, I understand there's some guys who came after March, but if the price comes here or goes to 205, can I buy now? I don't know. I mean, this is just such a weird question to me. It's just like, so I got in a trade here, but you wanted to buy here. What does that even mean? And then you say like, oh, I hope I can get a pullback, and you're just hoping now. And this thing is just keep moving up and up and up and up. Well, if I put a trade, okay, I'm just giving it on any trade. If the trade moves up a little bit, okay, like you missed it, the next day it popped like 2, 3 points. Okay, fine. I mean, you can at least start something. If no, if you normally take a $2,000, I'm just giving you an example, $2,000 size, you can at least like open for like 500, $600 trade. At least open something. You know that I'm in the trade. Okay, I'm talking about not option trading. I'm talking about stocks that we that I buy for some time. You can always open something. If the worst case, if the price is gonna come back down, you can always add another. I mean you in for like $700, $800. Okay, you can add another one more. So it will at least, if my entry is here, at least your entry will be close to it. ETF not going 6 points in one single day. You know that, I know that. A day or two, you can easily catch the same entry. Like you can adjust your entry right according to your risk, what you wanted to do. So, but the thing is like the trade is here. 2 weeks later, it gets to 200, and now you wanted to buy. No, how are you going to close this gap now? If I'm here and now you wanted to buy here, how are we going to close this gap? It's tough. You have to just go with your gut. Say like, hey, you know what? Screw it. Fine. I know this guy is down here and I want to get in. Okay. I'm going to just hold my stomach. It's like, okay, fine, I'm gonna throw the money on the, in a trade, so I can just get some continuation to the upside. You can do that, or you're gonna have to go half size. Normally, whatever size that you normally trade, you gotta open half size. Yeah, your payout is gonna be less, but at least you have something that you made. The only other way you can do is just like if you do have a price retracement, you have other half that you could add. Now you have a full size position like me. Now you're in. I'm in. So you can do that. But don't open a full size position if you missed out on something and you got the rally to the upside and then you said like, okay, you know what, I'm gonna throw $5,000 here. Well, open $2,500 here at least. Okay, at least half. But the worst case is this: if the price do come back down in next week or two, you can easily add another half, right? But but at least you have a lot less gap between you and me in a trade. But it will, price from 185 to 190 for 5 point move. I mean, that's over 2% move for, I mean, that's a huge move for a single day. I mean, you're looking at 4% move like this in a matter of 2 days. I mean, you should be watching what I'm putting out. It should not be taking you 2 days to make up your mind. Hey, I want to get in this trade or no. Well, I'm in. What is your excuse? You know, what are you waiting for? Because you don't like my entry? Well, how do you even know how I even come up with that entry to begin with? Because I'm watching multiple things. This is what I see. I should open the trade. But then you gotta take all this punishment as well. Brutal. I mean, hey, what it is. But I mean, I got in back here in March, right here. And you got, where did I open this? Something around here. Look at this whipsaw. How long I've been in this trade so far. Here, down, all the way down here. Look how close I got to the entry. Screw it. I'm not selling it. I'm up. I gave a big chunk back here. Look at this. 7%. Now the same 7% with time to 23%. I have all the time in the world. I'm not worried about any time decay or something. Screw it. Hold it. I don't, the point is like, I don't want to sit and fight individual stocks every single day on small, especially or small caps. Small cap is just, I know how what they did to this index lately is just they flooded it with the garbage stocks. They just kept everything nicely into an NDX and Dow 30 now. Those are the companies that keep gaining market cap. They just keep growing every single day. And smaller ones are just, yeah, keep them on the side. So this is a very good looking wave kind of, as long as it holds. I hope it does. And can draw some channels here. Let's see. Let's connect this load to this two. Projected here with one. See, it has room. It's a good thing. So we could do another one. Take this low to this last two that we just had. And then project it to this high. How much upside this one has compared to this. It has room. I mean, anything is going to start pushing um, over the channel. Oh, they're going to be a bit of a warning sign. You don't want to have too many overthrows. So you're going to get the same thing in a opposite reaction. In the same way. So I mean, keeping two channels, I mean, it has room. We should hit this mark at least here. So we're talking not that far. 2% upside, 2.33 just to get this 100. And then the other one is 4.75. That's a pretty good healthy upside to get to 236. So there's room, but we need to satisfy this wave count. Channeling has a room. Need to break this high to get to 230. This is only 2 points. We need to make a higher high. We don't want to crack this low. So IWM is good. Stay long. GLDS. Look at the gold. Ay, ay, ay. Look at this wave 1, wave 2. Look at the print. It's just beautiful. Look at the low. 11.06. Look at the fib. 111.07. Look at the upside. You're telling me the Elliott doesn't work? Yeah, pay attention to it when I show you. 1, 2, 3, 4, 5, right to that 200% mark. This is where the gold took a 3 years of consolidation. Very similar to this one, but took a little bit more duration of this 4. See, smaller 1, 2, up in 3, 4, extended 5th. It's just, I've been long gold from here. Right here. When gold was 700 an ounce. I remember that. This is my entire run so far in gold. I haven't sold anything. I just want to keep gold, always keep gold in a portfolio. Big, this is a weekly chart that I'm showing. This is, you can see those dates. Now look from here. I'll shrink it from here to the upside. When I was doing those for my old Forex days, this is what I have. This thing is a completed 1-2-1-2. You know, when I started counting gold that time, I didn't have that software that time. It's like here you guys, your 1-2-1-2. You know, but they got beautiful upside here. Gold is good. Then I went on Twitter for and I told here it was 169.64. I posted this thing on a Twitter as well. Just go long gold. This is gonna break to the upside. It's just a matter of time. Worst case, it's gonna take another year. Screw it. Stay long. But here you go. Patience pays. Gotta be patient. You gotta believe your technicals. You gotta believe your work. What the hell is so bearish about this? Do we see something like this? Like a 8 swings? No. So how we can say that gold is gonna is this thing is gonna come down or the trend ended there. No, it's not. You have a wave one, you have a wave two, you have a clear wave three target at 200%. The ideal target is always 161.8. Here's your fourth wave near 50% retracement. I mean, okay, so it's satisfying your wave count, telling you everything. Here's your sideway consolidation, where things are going to break to the upside. So if this thing rolls over here, so how do we even count that thing using this high? So you have a corrective here wave, you have a corrective move here, you have, you still have a 3 bunch of moves to the upside. If that would be the case, if they would be 1, 2, then what I would just have to do, then I have to just change this entire thing into a sort of a diagonal like this. With 1, 2, 3, 4, overshoot, and 5, something like this. So you can just do 5 like this with an overshoot of 5th, one leading diagonal. Then this would become some sort of a wave 2 that would come back right to this wave 4. Then from there it takes off in 3. But this is not bearish at all. So gold is good. It went to the first zone, it cleared that one. So what we're gonna do now is we have 1, 2, up in 1. That's a diagonal here. Down in 2. Look at that. Look at that low here. Right at 38.2. Took off in 3. Little bit shorter than 161.8, which is okay. Triangle 4. Diagonal. Extended 5th. Just remember that. Okay. So the 1 has a relationship with only 5 because 3 is done. 4 with 4. Sorry, 4 with 2. So now from here, we clear the first zone. Upside here for 5 versus 1 plus 1.36, 1.8, 253, 263. We have this channel here connecting this 2 with 4, projected with 3. So we have this little air pocket here as well to hit that line. And then we have all these fibs are all there. I stacked them up one by one. So we gotta just keep targeting those one by one. So then what are we at? 251. We'll look for 253, 87, and 254. And then from here, well, if we clear those, 263, 267, 272. So that's all the room for now. It's plenty of room. Is to fill that gap, that zone right there, is just to see if we can at least hit that line up from me. And if the gold really won't go nuts, it could overshoot. That's totally possible as well. But it will face some of the resistance there for sure. It's going crazy. And same thing I did on silver for you. Hang on. The silver is the one that's moving now. The silver is. Here. So this is from here. So this 1, 2, January 1st, 2003. This is the breakout that silver. These are weekly wave counts. So they will always gonna take years to play out. So you have same thing, 1, 2, 3, 4, 5. A zigzag diagonal A up in B, C, the 5 down in C. That makes it 2. And then you have 5 up, 3 down. Then you just need to look for the breakout to see then you can just take this measured move from this low to this high, projected from this low, 100% relationship with a 41.71. So now we're gonna change this thing to SOE. So here's that. So I need to change this thing. So you got 1, 2, 1, 2. Man, silver ready. Silver got some. Hang on for a second. Let me think. So here's your low at $10. Let's put a price there. So you have a 5-wave up in YE. It's a clear 5-wave move. Here's your B wave, which found support between 50 and 60. And C wave is right at 41.71. So you just look for 2 measured moves. Okay. Clean up all this. So what do we see here in the silver? So we know we have 5 up. We have 3 down. So let's do swings. High, higher, low. So what are we doing now? Making a higher high. Why? Because we took out this high right there. Right? Oops, I shouldn't go down. So the same major support now is just because it's where the silver took the biggest drawdown, right? But at the same time, when you start looking at this thing as in just in the nature, it's the way this thing shows, it shows up like this, like a round bottom, right? Look at that. So round bottoms, okay, prices, where do they normally break? To the upside. It's just because the price is just curving back up, right? Have you ever seen price like this? I mean, it again, it can happen, no, I mean, but the round bottoms only crash to the upside. So if we have 5, we're down in 3. How are we gonna fit 5 in a C wave? Because remember, C is an actionary wave, right? C wave cannot be a 3-way move. So this is basically considered a zigzag. A zigzag, 5 up, 3 down, we need another 5. But you take a measured move of 1 with A projected down in 2, that gives you a 100% because C versus A zigzag of relationship of 41.71. That's the minimum upside target that silver has to hit after being sideways since 2021. Sorry, once it tops out on, what the heck is this? Yeah, January 31st, 2021. From 2021, it tried many times here. This is a weekly bar. Look how many times it's trying to break, high failed, closed, false break, boom, full reversal, because it's trying to fight this resistance. One is gonna take out. And then for weeks, it did the same thing here. Same zone. Okay. See, the silver is the pattern because it's not very liquid like GLD. It doesn't like this one. Silver is only a cup pattern player, meaning that it makes round bottoms a lot of time. It doesn't have the like this, the actual the 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 cup that mostly technicians are looking for. It's like, making a round bottom and everybody hope for, the cup to form, and then they will play the cup and handle pattern. Silver doesn't do that because it doesn't, it's not as a liquid like gold is. GLD is the largest ETF in the world. Sorry, the SPY is, but in the gold market, yeah, GLD is the big one. So how do we get to 5 waves here? Okay, let's count. Leave the C there as is. So let's do some. Let's do some timing first. So C versus A was supposed to be ended here. So C 61.8. So 61.8 was supposed to be ended here on this bar. It did respond right from there. So 1, 2, 3, 4, 5. 5 weeks of a rally right from there when the time was up. But the price didn't get to 61.8. We're just only using the time ratio. So it bottoms here at 619. It really didn't hit that 161.8. So it bottoms here, moved up, just kind of a bit of a choppy move to the upside. Let's use 61.8. Now we use the same projection to the upside. The C wave. Right there.
Yes or no? Okay.
So we have 100% here. Leave this one. We don't need this. We don't need this. We do multiple. 100, not gonna want this one. Yeah, 1 plus C, this is gonna be fine. I'll use this one, 61.8. That's a good one. Okay. So we'll use these two ratios. So put a time here, February 9, 2025. And let's leave this one there. And now what we do is now we need to count 5 to the upside. So how are we going to do that? Okay, let's start here. So this is a low. Is this a low? If this is a low, that would be a truncation. Truncation cannot happen in a diagonal. Diagonals cannot be truncated. So we got 1, 2, 1, 2, 3. Not too much overlap. So you got 3 down, up, down. So you can start a wave count. Like this. The computer is even picking up the same way. So Make this thing a little bit brighter. I gotta change these color codes. I had a black background before. So
I am. Reset. Now literally once.
so here's your diagonal. And a little bit of a expanded variety diagonal, which is okay. Yeah, good. 5 is shorter than 3. So this is good. So you got 1 here. Make this thing go. Let me make this thing blue. This thing a little green. Um, diagonal up in 1. Here's your 2. Perfect. 2 down here. See, normally diagonal always retrace back to the prior 4th wave anyways. So it was pretty damn close. But it was trying to fight this trend line. So it doesn't really want to crack this trend line. And I tried many times here. 1, 2, 3, 4, 5, 6. So from here, see now we could see now this looks like a 5-way move because we're missing 4. So we need 1 that cannot be 3, needs 5. So either this 1 goes here. If we do that, then we need to start the count from here. Because putting 1 here doesn't work. Because if I put 1, 2, then where's 4 and 5? Unless I go to a smaller time frame to see if I can find. Yeah, you can. No, where I was. Yeah, right there. So if I do 2 here, that's 1, 2. You see, it's a 3-way move. Let's focus on this one, this part only. This. You need to, let's go to 2 hours. Because sometimes when you go to a smaller time frame, you're going to be able to find that. You see, it still is a 3-way move. I can see it, I just want to show it to you. See, it looks like a 3-way move because it's missing the 4. So now we go back to the daily. No, sorry, weekly. So we go to the weekly. Instead of putting 2, we need to put 2 here. So we need to make this as a some sort of a complex correction. So you can take this is a whole bunch. It's a lot of 3-3 moves. 1, 2, 3. So you got this. Perfect. Y versus W 61.8. Just doesn't matter how you're gonna close them. You cannot see if it's gonna be. You need 5. Yeah, your ratios and stuff is not gonna work. You have to sit and yeah, you have to spend time here. See, it looks like a. Let me see if the system breaks. Its 4th is pretty extended, way big. Move that. Go back to this one. Well, there's this. Make this thing as a red. Just if you simply clueless how to count anything, just put WXY. That's it. Just leave it like this. It's gonna take you as long as you satisfy the fibs kind of satisfy the the way for you, because your ideal, like if you have an extended W, your y is always is a 1/6, it's a 6 1.8 of W, meaning that if you have a bigger W, you're going to have a shorter y. If you have a shorter W, then you have an extended y. So from here now, we can count this thing to the upside. Silver has some upside. This is just breaking out. So this thing, I think it's going to hit pretty soon. Let me just move this thing for now. If silver doing the same thing which is gold did, because gold was sideways for such a long time, %100 already met. 1, 2. That's your 100. You need 100 or 161.8. You need those. And you can open a lot of upside. But for now, just focus on this. 35, 65, 35, 65, 37, 41. You know, they're all going to be one by one. They're going to be all coming. So you just cleared 100 right there. This one. So now the next up, I can stack these ones up one after another. So silver definitely worth. I'll just open this one more. You see, as soon as I'm gonna push these ones, the system is gonna open up a lot of fibs for me. But I don't need to project anything that aggressive to the upside. You know, I can go little by little. You don't. But for now, we have one. Now remember, diagonals is going to have that extended fifth. Okay. So for now it is your third wave. So the third wave ideal target is always 161.8. It doesn't mean it's going to get there, but that's what it is for now. We're just going to leave it there in order to get to that. See, you just got to move them to the side to make some room. So from here, you're going to use this high to this low. Let me look for a 100%, which is 35.65. So you set up a price alert here. That will be my first price alert. And then the second price alert is right there. That is using this high, this low. It's a little bit tricky. If you're going to put this one here, this low is going to drop. You see that lines up with the same 100%. So it doesn't matter. So this way is good because if we leave this 2 here, this swing right there at least satisfy the 100% move. And then if it breaks, then we know there's going to be the next one. Okay? Because if we put this thing back here, it matches that 100% anyways. So that will confirm, this print will confirm this print. because if this two comes here, so they both merge, right? So we're gonna leave some room to the upside, so we'll know exactly what the second one is gonna be. This is right. So then from here, this is the actual full measured move. It looks very small for some reason. I don't know why. I don't know if I'm missing some data here. Silver, this $10, this entire move looking very small. 41, I guess that's what it's gonna be. 157. Yeah, it's fine. I know. Okay, 157. But it's gonna pass that 100. You don't consolidate for this long, okay? And just to get here. You're gonna have a same kind of a like this. This entire move right there. Don't just sit for that long. It's just to make one final push to the upside, because it just too much time. You just went sideways, just breaking out after this, whatever double, triple, quadruple top you want to call it. You're just breaking out from here. The same thing with silver as well. Silver, I think, is going to go nuts. Well, it's all up to the JP Morgan Chase. They are the one who runs the silver market. And let me just tell you one thing, the silver is the one of the most manipulated market by JP Morgan Chase. They control the silver. So for now, we'll just keep this stack right there. But what are we at? 30? Just a reasonable target, I would say, to put them on a silver for now would be 35 or 41. That's the only one that I would, for now, that I would worried about. Once we'll get there, then we'll see how we're gonna track, and because there's plenty of prints up here. So this is the zone I would, because this is just simply taking the low to this high projected here, then to this high that we just made this high from this low, and then from this 50% retracement. So 35, 65, 41, 71. Those are the only two alerts that I would set for now. If it's get there, and then we'll see how this thing is looking. And then from there, I can always open the 61.8. I can always, there's plenty of fibs. I can always make some more room. I got a couple of charts open from yesterday. I didn't close them. There's a globe. That's good. I like this trade. Stay in this trade. Nice swing as well. See, same thing. Up in one, down in two. Here's your one. Here's your two. You see, we just hit a 100% mark there yesterday. Now from here, we have 78.6 sitting here. This from this high. So this is going to be a pretty sticky zone. So if we clear this, then we get to our golden ratio, 161.8. This is where we're going to have this resistance sitting here. This is where we had the biggest drawdown. So it's going to give you the 224, 225. This is the first we hit it yesterday. if we clear this one, our 100% move from previous swing at 236 get to 247, which is going to be 16161.8, that satisfy the wave 3. With the prior high of wave 1, that's going to be resistance. This breakout right there is going to open more upside. So there is long way to go. Long way to go. But I like this company. I always did. So I kind of took a little bit of a back and forth kind of beating. I was watching swings and I was like, just gotta, I have shares, just gotta wait it out. That's all. I said, I have a clear 5 wave up here. So it's gonna be some sort of a 1-2-1-2 or whatever this, however this 2 is gonna settle. Finally making his way up to the upside. The all-time high is 354. As this stock has, it's gonna go. Unless it fails, that's gonna be a disaster because I'm hoping this is all of 2. You know? So I'm really hoping this gonna be the same way. You see the same top, perfect looking round bottom that is shaping up right now is gonna hit the wall. And then if we could consolidate the one we just looked at, silver, and then it could just rip it to the upside. This stock has upside. That's what I mean. That's the way I see it. And I'm just gonna stay long this stock for a long time. It's gonna be take that sucker to 400 or something. That'd be nice. But it's gonna take time. I don't know. There's not. I don't know what else. Weekly, this and this we already looked at. Line chart looks good. IWM is kind of choppy, but it's grinding. You see how much lines is. Ugh. But if you look at the whole thing, the IWM from the very high, look what this price is doing. You know, just same thing. Just looking at so many charts today is like, I mean, yeah, the worst case is going to form eventually a handle if it's going to come out to be that stage. But IWM has upside. I mean, you know, you're looking at from 2022 highs. Look where, I mean, what, 2024? I mean, just looking at a line chart, however you want to look at them, I mean, just a round bottom, you know? But the only thing is any sell off or whatever pullbacks, I think if you don't have IWM, I think you should just buy shares. Just buy shares, that's all. And just stay along IWM.
Two, two, three.
See, the thing is this, that the way silver did, we just looked at them like this. Okay, let's suppose if IWM do manage to push back here to the highs, but you still gonna have that massive resistance sitting here, you know? So are we doing just a cup like this and we're just gonna rip through it to the upside? That's what I guess the Tom Lee was making his call based on this, but I don't think so. I think it's gonna take a bit of a pause here. I mean, if you have this kind of a giant, okay, for from 2022 to here's your 23 and 24, and you're going to end this thing in 25. I mean, you have what, 22, 23, 24, 20. That's 4 years. Okay. 4 years of this mess. Okay. So the 4 years of this mess are gonna be due for a breakout. Yes. Yes, it will. Price has consolidated for a very, very long time on a side. This is nothing you can count this thing as five to the to the downside, like make it like an 8 wave swing. Just stay long. I'm not selling those. Absolutely not. And look, not until at least we reach to the all-time high first. Make a new high, then we'll see. Um, MSTR, there's nothing. Well, MSTR is a totally different. There's no comparison with SLV. How are you gonna compare a metal market to a Bitcoin? You have MSTR definitely is gonna give you a lot more alpha, higher premium, higher premium. Well, here's your daily wave count. I've had this thing just it's gonna be due for a wave two at some point. It will. Okay. Right now is it's trying to make this holding this support right there, which is 200, is where you have remember the all the drawdowns. It's trying to fight this. You see, because the stock split, everything just changes. I hate it. I can't go to a smaller time frame now. You see what happens? How all the labels changed. That's why I hate stock splits. The wave four is still there. I can see it, you know. But as I'm gonna stay on daily, everything stays in place. Now if I'm gonna go to 1 hour, I can now zoom it. Look what happens. The price is all up here. It copies everything, but I tried to refresh this thing so many times. It's just the same thing. Look, all the logos and everything. Look, price is here, and as soon as I'm gonna go to daily, everything's gonna go right back up. So I always have to zoom it on a 1 hour time frame, which is fine. The wave forward is here. I know that where it is. Just have to open it up like this manually. Now we need to count 5 in 1. So this move is all of 5. Can we put 1 here? Make 2 here. But we don't have any signs of 2 yet. I had this thing here first like this. But now it could be. So is all of 2? I mean, it satisfied the count with 2 if this is what it is, and then it's just gonna be ready in 3. If it is not, then can we leave something like this? Make it like that. Then we just take 1 leg here and then we go, you know? So regardless, I mean, if here's your resistance, here's your support. Dude, who the hell is outside? Somebody's mowing a lawn outside. It's so loud. Oh, 185. So here's your resistance, here's your support. And then ABC here. So it doesn't matter. I mean, corrections are not that easy to spot, or I can just sit here like, oh yeah, this is 5 and this is gonna be 3. No. You watch your Bitcoins overnight, and then that's how your MSTR is gonna behave to your Bitcoin. There's some day or two that MSTR goes a little bit off Bitcoin, like the Bitcoin is up and MSTR goes the other direction, and then it catches up. Okay, so yeah, one day really doesn't make that. It doesn't has to trail neck to neck. There are There are some days that you see like MSTR is down like 3, 4 points and Bitcoin was up like 1,000, 1,500 points. Yeah, it happens. But then the next day it catches up. But it's tried to stay as pretty much together. So the Bitcoin, you can trade those futures. Those are, look on the, on on the Bitcoin that I updated. Where the heck it went? Right there. Look, the price was right there, which was on Thursday night. Right here. You gotta wait for this price to break. Look, breaks here. Target one, target two. That's a giant move. Well, nobody knows it's gonna get to a target two, but I always leave at least 2, 3 because Bitcoin is wild once it goes. So from here to here to here. Here. 68,524, 69,006. 69,006. The high was 69,255. Bitcoin works really good with fibs. Really, I really like it. You know, so it it works good. But the Bitcoin, where the heck it went? Right there. Here's a Bitcoin. Look what RRG did. It was here. Remember, we've been watching this thing and weekly was here, and I mentioned, I think last week as well, that is very rare for two secure, like the same secured, like, Bitcoin or whatever stock you want to call it, could be in the same time zone at the same time, like meaning that daily was in a lagging quadrant and the weekly is in a lagging quadrant. I mean, it's just, there's no brain damage there to go long. You just gotta have to wait. Where do you think this thing is gonna go? We know it's gonna go to improving. This is where this Bitcoin took off. It was here, then it went to improving, got the move here, went to a leading quadrant, got the entire move. This decline right there, it came down here toward the weakening quadrant. Here you go, and another go signal triggered here. Boom. You see how this thing reversed? Didn't go in there. It's supposed to go there, but it didn't. It came down here with this weakness here, and then what happens? It reverses right back up. Why? Because this is making its way here. This is northeast direction here, heading 45-degree angle. This is why I got so interested in Bitcoin. Like, I never talked about Bitcoin before. And I never wanted to trade Bitcoin either. I was like, you know what? Screw it. I was like, I don't want to. I remember my old days. I'm 24/7. That's what the Forex market is open. 24/5, sorry. All night market is open. And I don't want to do that. But when I start putting up these swings, and I'm like, oh man, this is the way to go. I already had an account with Coinbase. I just got to put some money in there, and I bought Bitcoin on Coinbase right here, 54,707 right there. So that's a pretty good upside so far. It's gonna go. It's gonna go. It's gonna hit 80,000. But it's trying to break this now. Well, we have our go signal. We have rotation that looks pretty solid, very good, because still gotta get to this leading quadrant. And daily looks really good. Can we just make a room to the upside and crack this 73,803? We need to break this high. Okay, because this is where all the consolidation took place. If we take this high right there, it's going to be a quick run to the 80,000 mark. if we manage to consolidate or dance around here on this line, okay, because right now then we could now the next support right there to the downside is a 64,931, which is this high. So we are at 68,150. So this is our zone right there to the downside. But again, there's no sell signal here. So I'm not worried about any downside for now. So just gotta look up. So this looks good. This is good. Higher highs, all good. I mean all higher bars. Looks good. So just look for up. Now my eyes are only on this one now. I'm not worried about 80, 80 so far. This is the target, is for the price to break and make a new high first. If it does manage to break, then we could use the upside projection toward the 80,000. So still got room to work. Around 7.5% upside. So it will crack. It's just once you have a failed swing, as I talked about this thing before, it has call it like 95% probability is gonna reverse the swing back up. Because the sequence goes, you have a lower high, you need a lower low, right? But it didn't happen here. It didn't break this low. And now what happens in the opposite side, it took out this high. So Bitcoin is good. October 18 was ended yesterday, right there. This is the cup and handle that I was tracking, and didn't get to a 100. And a 100 is that 59.34. It's the same thing that we just looked at it here. Oh, 59.64 I have here. So I'm like 30 points shy to this print. So this is just too perfect to ignore. I mean, this is amazing. Just look at this damn thing. 10 days. So you have a round bottom, right? Here's your handle for 10 days. 30 days run of 9.2%. Here you have another round bottom, exactly 10 days to the low, and you have 30 days of 8.80% upside. This is remarkable. Just, this is amazing. If you really look at it side by side. Wow, perfect. Okay, the time and price has played out here. It's just amazing. Just amazing. I mean, I have seen a lot of good looking charts and that you could project one side and you can hope for the other side to play out the same thing, but I haven't seen this kind of a beauty in a very long time, to be honest. You know, this is really, really good. It's damn pretty impressive. And and if you put our year data, year high to low for this year, this is pretty good. That's the high. That's the low. That's the whole year. Look at this one that's low to this high. Just the two patterns that I spotted. They'll just literally work side by side. with price and time. Same year. And we're still in the same year. It's beautiful. So the point is like, do you really need 4, 5, 6 years to find patterns or some, oh, this happened back in 1930s, 1929 that I wasn't even born, but it's gonna happen now because I saw it? I mean, you believe that nonsense? But this is, it's within the same year you can find so many repeating patterns that could just happen a couple months ago, to be honest. I've done it so many times. My Twitter page is full of that stuff. But people are either obsessed with ports or they just like, it's kind of annoying, to be honest, that the price just keep ripping up to the upside. I guess a little bit sometimes. I mean, I'm doing really good this year. I'm having an amazing year. Okay. I have no complaints. But at the same time, just like looking at this much upside, it kind of started to irritate. It's like, what the heck is going on? Just keep going up and up and up. And I like, when are we gonna stop? You know? And everybody's just like, I do kind of itch for some puts as well, and I'm taking some of these counter trends, like taking a small shot, but I'm not sizing up those trades, you know. And I'm keep saying it's like I just want to dip my toes in the water just to test it out. Is it warm? Is it cold? So I'm taking like, $1,000, $1,200 risk on puts just to test it. Like if I'm wrong, like I'm not gonna be that wrong. I'm not taking $3,000, $4,000 worth of puts. No, I'm gonna get this. You don't do that. Just if you want to have enough time, try something small. If it works out, you can always add a little bit more. But you don't want to open a full size position at the top of the market. Like, who told you that this is a top? Are we gonna see that kind of a drawdown? And you think that thing this much of an upside is gonna come down in a matter of like day or two? I don't think so. So it's pretty good. If you have time, you can make a lot of adjustments to the trades. If you have a shorter time, then you're gonna have a challenge. Here's a SMH. I don't know, man. I just don't have a good feeling about semis. Look, this is in a seventh swing right now. Okay, on daily. It's getting up there. The eighth swing is gonna be to the downside. So if this seventh right there takes out this three, it really doesn't matter. It's gonna still stay at 7. And from here, it's looking for this eighth swing to the downside. So this is the damage right there that ASML did this week. And then the TSM came to this. Okay. So I'm watching. Swing is up. See where the green line pops right there? Swing is okay. But the number is going up quite a bit now in SMH. But then if I look at SOC, back it went. It's only trying to push toward this third swing because it's the 1-2. So I'm not. I mean, hey, it's so tricky to guess these earnings, but I don't know. If market is gonna get hit, semi is gonna be the ones gonna take the most punishment. Because I mean, only positive sign right now is I don't have like a no go. This is like I use them free anyways. They give them as a courtesy to me. So it doesn't have a no-go. I mean, it's okay. Swing is up. Market is pretty firm. This is the mean reversion right there, the blue one. Um, the ESM just kind of, I don't know, semis can just stay sideways and kind of just buy time. But this is just looks scary. This thing. I don't know, I'm just thinking that, you know, this is scary. So I don't know. Um, I don't know which of the earnings are up for a surprise because there's plenty of them are coming. Um, but we'll watch Texas Instrument and Lam Research. Those are the only two for next week. And then see if they could give this push here, that would be 8. So, but this 8 swing now, it has to stay above this low. Yeah, you take any one of these lows, yeah, the semis are done for some time. Yeah, you don't want to take out these lows. But then we just have to wait for one of these mean reversion signal. Then we'll go long, heavy semis again. These are one of a kind signals, but they don't come that often. It took me a very long time to figure this thing out, how to pick bottoms. I mean, you can miss them, but they have to hit at a certain bar right at the bottom there. Not this one, this one. Yeah, they take a very long time. See right there. But you can get some upside because this is a daily bar. It has to hit on that specific day. I look for them, but again, they don't come that often. This is my mean reversion. Did a lot of back testing on this one. What I was gonna show you, this big is just it's a joke. Tesla, no go here. I don't know. Might take a leg lower. I don't know. I didn't even I didn't even trade Tesla, but they have earnings now. So look at this swing right there. It's so difficult to count this thing as a wave count. I did this thing on Twitter here. One case here is the same 1, 2, and see if this is gonna be some sort of a diagonal. That is a possibility, but this zone has to hold for that. It has to form another 5 to the upside in a C wave, then come down in a 4 with an overlap, and then go up in 5. So this is one possibility, and the other one is this triangle. So we have full triangle going here. This is down in A, up in B. So you got 1, 2. Now you got a complete 3 within this 3. So you got 1, 2, 3. This is where we just chopped around all week. Looks like some sort of a triangle. And then it shows you one more push down to the downside to complete this 3. Once it completes, then it gives you the bounce up in 4, then down and down in 5. You have to complete 5 waves to complete C of the E of a triangulation into your 4th wave. A C wave cannot be a 3-way move, remember? So it has to be a 5-way move. So this is all the support that I could lay. If price bounce and manage to break above 237, okay? Because the invalidation right now for this wave count is 237. You break 237, we're going to go right back to this one. So this is why one side will confirm the other. They both cannot be wrong at the same time. It's just impossible because they're two different waves, the way I'm counting it. But the one will confirm the other one. Then I can just simply get rid of that one and just stick with one count. So you just make two different ways, but you gotta know how to count all this in order to make two different cases. So I really kind of hope that this happens. Seriously. And I'm going to give you a reason why. The reason why for this I favor this one is just we just get done with this. And then from there we just resume back up in 5. The only problem with this one, diagonal takes forever to complete. If it does happen to complete this, and then you're gonna have another 3 to the downside, then you have another 3 to the upside, then this wave 2 is gonna come all the way back down, back to 4th wave again. Then it can come down as much as 2, because this is where the diagonal starts from wave 2. So the retracement of after completing 5 could be pretty nasty. So it's too much of a zigzag, 5 up, and then you have 3 down, then you have another 3 up. So that completes 5. Then you need another 3 to the downside to make 3. That will complete 8 swings, 5 up, 3 down. This one, you just done with it. Just get done with it. That's it. You just take one final leg to the downside. Just from there, you just start resuming back up. Then you just form the trend wave to the upside. It will take time. Yeah, I mean, it's not up to me to decide, but I would much rather go with this one just to complete this damn last wave to the downside. And then from there, it can resume the trend to the upside. Right now, I mean, just, I don't know. I didn't even trade Tesla. There's nothing to trade. But look at the entire week that it just went by. And look, this right there, this red line, you see 200 EMA is fighting this one. That's sitting right at 213, right at that 61.8 fib. Oh yeah, you're gonna break this one, and yeah, of course, it's gonna open up more downside. So you gotta watch this 213 area. You don't want to have a daily open and close below this 200 EMA. Yeah, some of them, well, they moved, but you crack this, yeah, the price definitely is gonna be bearish for a couple days. So watch the 213 area. RSI is pretty oversold. I kind of leaning toward just to buy some Tesla calls, to be honest. The reason why I'm saying is this. I understand there's no go. Okay, I'm watching. For 220, we have a 200 EMA sitting at 213.45. I think that's what it is. Yeah, 214.45, right around here, 213, 214, doesn't matter. Okay, so we have a support right there. Pretty good support of the 200 EMA. At the same time, this one is way down. Look where this rotation is going. How deep it is. And so much away from the benchmark. This thing is going to take a wild turn. I can tell you that, because it's so much away from the benchmark now. This trade is going to have a lot of alpha. That's what you call, is the further and further away you are from the benchmark, the bigger the move that you get to the upside. Because this rotation from here is not going this way. Just remember that. It's going to improve. I'm watching every day because it's not ready yet. And um, if it's starting to form a hook, yeah, I'm gonna swing some calls. Um, but not right now. But at the same time, now we got earnings coming up in 3 4 days, so it could be a turnaround story. I wouldn't know that. I mean, but you know, I I watch RG very closely every day, and we have taken a lot of trades based on RG and has paid us really well. You know, this week we had what, so like 5 trades we did this week. All 5 of them are pretty good. Um, yeah, we did Netflix, like Amazon, Workday. That was the puts, Paycom, and Adobe. These are all RG trades that I've been watching. You know, yeah, I had a pretty good week. Not a bit. I mean, I have my own account, but it's a pretty good week. So what do we have here? We have a Tesla, which is way down. Nvidia is up, which is fine. Meta is losing a lot of momentum right there. Amazon is, we closed this one yesterday. It happened to be only up one. I like Amazon. I'm gonna hunt Amazon again. Amazon looks really good to me. Let me show you the stay in place. I like Amazon. It's a pretty clean looking wave count as well. So we had a resistance here. I think 189 something, whatever. I don't know where we booked, whatever. Yesterday, closed this one. But try to see if, okay, this is a low. So we have this high, this low. We can count 5 up, 2 down. Now we need another 5, 2 to get to this 3. But I don't know how this thing is going to shape up, but we can just look for these 200% two swings tops, which is right at 205. Amazon all-time high is 201. So this is a low right there. Got the breakout. That's the low. Then we're trying to make a push here. So we can just complete little 5 here toward this all-time high. That would be nice. Then I'm not worried about any more upside from this, just to get to the top. But the point is, like, like there's so many stocks that I'm watching, okay, that it just making these, there's so many of them, okay, they're forming up these round bottom patterns. We just looked at silver, we just looked at IWM, we just looked at, now I'm just showing you Amazon. I mean, I can show you, I don't know, 10 15 more, okay. I mean, you can sit here and think all the bearishness of whatever you want to think, but I mean, there's some good setups out there, and I don't know if they're just waiting for a earning breakout, or they're just gonna break eventually. I mean, but just There's so many of them, you know. I mean, S&P, we just completed one basically. Not, I wouldn't say completed, but we did the same cup, you know, cup pattern. There's tons of them like this, you know. I mean, but you gotta have to kind of like look at on a different time frame. Like, look at this, Adobe. I know it's just a nightmare right now because it's, but I mean, look at the picture of this. I mean, there are some stocks. I mean, you just gotta have to. I mean, I played Adobe. I closed it. That's I'm just taking like counter trend moves, you know, just take some, you know, swing some calls and hit that number, you know, hit the certain fib target, and I'm done. That's it. I've gotta make some money as well. But like looking at like little bigger picture, just for you to consider like, hey, if I would have buy something and you know, I mean, it's some crazy upside on some of these stocks. I mean, these are all three-way moves. I mean, the worst case you can call like, okay, A, B, C, and then you have something like this. That's a different thing. You're just taking a much kind of larger fourth wave. Basically, you have an A, B, and you're gonna have that C. So you look at Adobe from 500 down to 200. I mean, it's possible. I mean, it's not this 280 here. What is 200 if it's already down at 280 before? So there's tons of them. Okay. Oh boy, I need this. Gonna pull up all these 50 year. Um, let's do some scans. I was gonna do that. I'm gonna be done. Gonna look at. Let's do. Let's scan on this. Any no go signals. It's only two of them on a weekly. Comcast and this one. Anything on daily? Oh, four of them. There you go. Netflix triggered one yesterday. In wild stock. So there's Netflix triggered yesterday. Netflix is gonna hit 800. I have a pretty good. I'm just looks 800 looking pretty damn promising now. I mean, I took this high on that diagonal. I wasn't expecting this kind of a rip to be upside. Um, this. So I did a pretty, I mean, a good way to define the double diagonal, but at the same time, you're like, look at the rip upside rip to the on a stock. But again, you know, these are earnings. You can't yes or no. Where I mean, that's a sweet spot because we had an outside bar a week before, and this week now we put another outside bar. So we have two of them in 2 weeks. So then, so this is one ISRG popped. Oh, this one, yeah, they had the earnings. CSX triggered one yesterday, but this one already got the move. Dexcom is showing a little bit darker. Dexcom showing one here. So Dexcom might take a little bit of a breather. Jeez, look at this gap. What the hell happened to this stock? And it looks like a daily chart. Looks like a sideways. Well, it can come down more, but geez, can't even you go to a weekly time. See, weekly doesn't have that, and weekly is still sitting at no go. What's going on here? Can't even move these lines, guys. Yeah, it looks like a 3-3 way move. 3 down, 3 up, and kind of like this looks like some sort of fourth wave. What I was looking, it's not going straight. It's not even good. Okay, anyways, screw it. That's it. These are the only go no go. Oh, somebody bought a 10.5. Hey, Tesla is due for for the RG to improve, but Tesla doesn't have any. Weekly has a go signal still on Tesla, right there. So we got this upside, but on a daily time frame, it's just we don't have the green light yet. But again, it could reverse. See, weekly is good. So yeah, I'm in there, so I know. Painful to be painful to be in this trade, to be honest. But what can we do? I mean, I have shares. They're up like 3-5 grand one day, and then they're down 3-4 grand the next day, or it's just a part of the game, It just we don't know what the heck is this on a weekly time frame. It's just very, very long consolidation. Look at these tops. This one, this one, this one. Recently, this one just failed. It needs to take out one of this high right there, one of these highs. But call it triangle or call it WXY or whatever. I mean, it's just the way it is. 2021 high. This gonna mean this kind of a mess. It's not gonna pay you any return. I mean, we all know Tesla has no return for the last 3 years anyway. So that's the reason. If price is not trending, how you can expect returns? It's common sense, right? Fundamentals fine. As I said, fundamental makes the market the market. Technicals helps you to get there. That's what technicals are. So it just doesn't give you that. Anything else we could do? A lot of these signals that I built over the years. We can do 45-degree scan. So sell signal. We can just do inside bar. See how many stocks were closed with an inside bar. Oh, 13 stocks. Oh, this is cues that I'm doing. Never mind. Gotta do where the hell is S&P right there? Oh boy. 37 stocks closed the week with an inside bar. So change this thing to week. You see, they're all inside. Let's do this. Bar. And what stock is A? I don't even know what is that. Okay. Amgen. Whoa. This stock is very, this is the second. Wow, what's going on here? Inside week, higher week, inside week. Took this leg down. Doesn't look bad. I mean, it just looks pretty. It's a lot of consolidation going on here on Amgen. I like this stock. Huh. See, a lot of these inside bars for a couple of weeks is going to show you it's gonna confirm triangle, because inside bars are never defined as a trend bars. They're not making any highs and not making any lows. So it's an inside grind chop here. An Amgen closed an inside bar. Bax International. Kitty Cat. They're gonna have earnings soon. Caterpillar made a very nice move. CE Energy, Charter Communication, CNP. You see, look at this. You've watched all these rebounds, that's what I'm saying. This stock is just, there's so many of them. Because I run a lot of scans, like I do normally, like after when market close. And I'm looking at so many of these stocks. They're like making these U-turns, you know? Oh, Costco is a mess right now. Oh boy. What's going on with Costco here? Jeez. 1, 2, 3, 4, 5, 6. 6 weeks over. It's just chopping around sideways for 6 weeks. Close the week with an inside bar. Wow. Costco is confused, or just probably out of air. Copart. And they do what does that company do? They recycle, this recycling company. CVX. You see? Here, back outdoor. Look at this. Domino P. No, it doesn't. How come? Doesn't have that. It's a false one. Yeah, some of them are not. Why Google is showing here? No, it shows 38. Something is not right. Let's and see. More is coming. See, some of them are not showing. But if you run so many of them, it's just sometimes it picks up, sometimes it's gonna miss it. It scans 500 stocks in one shot. It just narrow the result for you based on that particular bar. You see, it's not showing. I need to restart this because I run too many scans. This one is showing. It has to be that thing right at the weekly bar. See, none of them are. Oh no, sorry. I'm just only looking at the inside bar. Never mind. I'm so confused. I'm an idiot. I'm looking at only stocks that close the week with an inside bar, not the signals. Let me look for the one for the mean reversion one. Those are the bottom ones are the best ones that I like. I think it went 240. I don't need this. I don't have this anymore. It's mm, where's my image chart? Come on, work with me. What's going on here? Oh, it's EMD. Dun, 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 dun. Here. Mm, fine. No. Yeah, market an uptrend. Nothing is so not too hard. Oh, there you go. Let's go on the daily ones. This. This. Some of them they're gonna go hard. Some of them are just, but they're they're good. If you want to consider something that you can play an expected move, you could You can swing a trade. I've taken quite a bit. There's some, look at this. It has to hit on that certain bar. And that will, from there, you can uh, play the upside. Look at this one. I mean, this one, not as much. But again, not everything is going to work so damn perfect. What is this? ALGN. See? Sunfield. So you can get a decent upside. So let's say in this case, ALGN, you could make a case here. I think it probably bounced right, but that's 78.6. It's close. I mean, if this thing goes, you could do, say you put a stop loss here as your entry, as your target. You know, you play the upside. Look at the risk reward is excellent. But you need a stomach to hold the trade. You know, put a stop loss right there, right at this low, and then you target the high. Then these are daily, so it could take several weeks to play out. If the earnings came up strong, I mean, yeah, it's going to hit pretty quick. Signal gives you the bottom, doesn't give you the upside. You have to measure it. AMAT. This one triggered one here. Has a couple false one here. Look at this one. Third another one. Applied Material. Look at this one. It has very good history, like results. I have to back tested this thing so many. Look at this, a double one. Yeah, this is for solar. Yeah, this stock, I think we traded it once. Such a damn. Uh, some of them they go. See there, Clark hit one. Yesterday it came on a daily time frame. I like weeklies are good. Weeklies you can just stay in a trade for some time. Daily you can play 1 or 2 days. I mean, it's still a decent upside. What is this? A can you? Oh, it's the first time. They're very selective. I mean, they don't nothing on weekly. Just I would consider this. Let me see where this thing on RRG. Oh, there you go. It changed it because this is a it's kind of flat. It's flat, but it can turn it on. That'll be nice. And swing 5, 235 upside target for now. Where the swing got changed. The swing is down. It's just trying to pick the bottom for you. That's all. That's what this signal does. And picking bottom is not easy. Sorry. They're not easy, but you can come really close and literally call the bottom several times. So if I do go, no go, see, it tells you no go. This one was go from here. I like this one. I don't think I ever traded this stock before, but oh, weekly looks good. You see, this is good. And I'm telling you, it just looks a little good. Weekly looks good. It's just the rotation in the daily needs to just curve. Makes a curve like this. Daily is already ready. Weekly is already ready. Right there. What is this? This is healthcare? What do they even do? Is it a healthcare stock? Oh, dental? Oh boy. Need, need to hit some sparkling teeth. Oh boy. Align technology. I don't even know how their option chain looks like. I'm 235. Could do a spread. That's expensive. $200 stock. Gotta be cheap. But we could oh man, this stock is selling out 4 weeks in a row. Yeah, it's gonna be a little tricky. You see right there? These are weekly bars. So for 4 weeks, it just keep putting lower lows, lower bars. Yeah. 1023. Okay, keep an eye on it. I mean, if it's expensive stock, 219. Geez, 4 weeks of drawdown. Yesterday just see. Okay, yesterday has a higher bar. Okay, there's another one. I'm testing this these days, but I haven't really. There's another I wanted to run. This one is outside bar. This is a whole thing. That's a whole different animal. Um, outside bar to the daily. Let's see what the daily shows. Okay, Adobe. So the outside bar is different. This one, I made this one yellow. So I'm testing this one. See, it's called an outside buy signal. So that triggers. This was a little bit decent. This was good. This is good. So you have to back test them. So when I make them, I just run like one contract just to see how this thing is working. Boston's and if oh CL Colgate, Lulu. These are all daily. and this MDLZ. It kind of gives you the hint like when it was triggered the last time that what you, but it doesn't mean that's gonna do exactly the same thing, but you can kind of see the results, you know, that as soon as that signal trigger on that particular bar, then you can expect like what kind of a return that you got. That's how they test these signals. 5.7% here, 5.4% here, 5 point, you see, like this signal right there, now you can say like it has a pretty good chance I can hit another 5% upside because I've done it like 3 times, so it kind of gives you, but doesn't mean that it's gonna happen. But well, that's the risk that you are going to take. But as you can see, based on that particular bar, when it hits the signal, it gives you an average 5% upside. So if we take that same 5% upside, I put you right there, 74 kind of area. Okay, so let's do this. So we run our fibs. There you go. Right to our 78.6 fib. So there's a possibility this thing can rip. But at the same time, when you, I mean, man, this market is just, look at this. Man, I don't know. This market is just has some. This isn't this market just the beginning. To be honest, to me, it looks like there's so many stocks that just you gotta sit and find them. They're not gonna just come to you like this. But because it makes my job easier, because I run scans. When I run scans, it always picks out but there's only 500 stocks. There's only 5 stocks that I just picked out here. Let's do the same thing on a weekly. Nothing. I know it takes a very long time.
It's going in the middle.
That's,
Middle.
I don't have anything.
The middle. So I'm gonna stay in the server.
Get this. You can do the long one. That's a super trend long. Here you go. These are super trend long signals. I like weekly, that gives you a little bit of, oops, daily. So these are daily. So that's a super trend long buy. There you go. And some of them are just kind of goofy. Here comes a Dexcom, EW, trigger one, J&J. But you see, it has some upside, but it's more a generic one. Mine is better. Oh boy, trigger all the way up on the top. But you can do the same thing in a cell signal as well. Yeah. I think it went. This is a good one as well for the swings. these are the swings, like you have two higher bars. For the third swing, you need a third swing to turn up, right? Look at that. 72 stocks. You see how fast it scans? Look at this. Yeah, it's like this. Right there. That's Apple. So basically what it is showing is that Apple has two higher weekly bars. So it needs a third bar to back I'm doing it needs a third bar for swing to turn up. You see? You can do this. They're doing a weekly? Yeah. So it has a two bar, like let's say this one. See, two higher bar. You just look for a third higher bar, like this. Like this one. See, it has a one weekly higher outside bar. This week it made a higher bar. And now it's showing that it needs to take out one more higher bar, then the tile will turn true. So then you have three weekly higher highs. So it basically right now, like this stock, has to crack 21.22 next week for this tile to turn. Oh boy, that's so many of them. Can't just can you imagine, like like you're scanning 500 stocks, yeah, they all look good, but you can't just throw money on them left and right. And this. Yeah, I like this one. Let's see. Where are we at on a daily? Okay, let's see here. Let's put them here one by one, see which one looks good. See, still weakness. It's going to be a disaster. KV. Yeah. Well, you're picking up a bottom signal. So this one still at least starts showing some life. Oh, this is a 1-2 swing. What company is this? KVUE. I don't even know what is that. $21 stock. High is 23.59. This might, I don't know, these $20. It's, I'm gonna attack this high because we have a second swing. You need a higher high right there now. So you need this. Then you can project more upside. But this looks good. Oh, right there, 21.28. Well, the only thing is can come down more is gonna punish you with a second swing. I mean, I'll watch. See if I can get. I don't have a. It's probably fresh. I think it probably settled yesterday. It's not showing a third print to the upside yet. It will. It's gonna give me that target. I don't even know what company is this. Okay, I gotta go. Have a good evening. Have a good day. Tired. Oh, Tylenol. Oh, they make all this? Neutrogena. Why this thing is all muted? Okay, I'm gonna- okay. Let me
Yeah, Kenvue is a consumer health care company.
oh, okay.
Yeah, they make all those products.
Yeah, I don't know if this thing is gonna take a leg lower down to 50 or yeah, I'm gonna ooh, this has to hold. That's a 1-2 swing on AMAT. Oh, buddy, you gotta hold this 173.66. You're gonna be in trouble because it made a new high. That's why. Oh, this one is toast. You see, you're getting out that 7th swing. You see what happened here? You just need to take out one of these previous swing low. That's all. Story is over. Your upside is done. Your upside is over. You know? It was trying to fight. You had a failed swing here, managed to hold this low, and then it made another high. Look at this. This KLA 13 swing. See how it failed? It just gets dangerous, I know. When you're gonna have a higher wave, when you're gonna have a higher count, you're gonna get hit hard. I don't know when, but eventually you will. I can tell you that. I will show you some of these stocks that there are looks a little scary. And you can see examples as well for the stock that, that taken some. Look at this. Celsius, 13 swing, see? This is the same thing that kind of worries me right now is this. Sammy just needs to break this low. That's it. Because this swing, fine, it can go up to 8. And then from 8, it has to look for this high right there to look for 9th swing. So then the count can get higher and higher, but there's no limit for it. I get that. It can go up to 11, 12, 13, 14. But it's going to get to a certain swing that is going to fail and it's going to take out one of the low. That's it. Game over. You know? You see? Fail swing here. Look at this. AMD was okay. AMD trying to settle down in a second swing now. What was the other one I was watching? A couple. Look at Google. Google is an 11th swing right now on a daily swing. 11. Just keep that thing in your head. It's gonna Google has a pretty good chance it's gonna take a hit. I mean, I hope not, but it will. It's an 11th swing right now. It just needs to crack this low right there. Boom, that's the story's over. What is the other one? Meta 11. It's going up. I get that. You see, 3, 4, 5, 6, 7, 8, 9, 10, 11. But it's just wait. What's the other one? Amazon. It's okay. Amazon is trying to push to the outside. Microsoft, it's okay. I like these fresh ones. 1, 2, 3. The ones again. Look at this. Costco. 11. Yeah, Costco need 7.92. It's the other one can Netflix. This pop right there's a fifth swing. It's making new highs, but again, this is the fifth swing, but it's okay. Still kind of fresh. We did Amazon, Google, Meta, Microsoft is fine. Yeah, that's it. Oh, the Nvidia. Look at that. 9th swing. Nvidia is gonna take a hit. Just wait. You know, I mean, it could go higher and higher. I get that, but one discount getting very, very high right now in Nvidia.
Mo, can you show Meta again?
Better than 11th swing right now. Meta is just, it's still got a long way to go, but you have a major support here. That's what you have your drawdown. And here, your story is going to be over. You need to take out this low. I mean, it's just right now is an 11. To me, this thing right there looks like a diagonal, ending diagonal. You could stay up for a while. This is an ending diagonal. You see right there how price starting to contract, and this, and then these swings right there starting to become narrow. And you need something like this. You see how close they're starting to get? Yeah, it just gets a little scary. But it's okay. I mean, well, I mean, it's gonna, there is a very high number now. I know all the high numbers, they're gonna get punished. They're gonna get punished. You know? But again, nobody can time these moves. So you gotta be a little cautious about, just like for me personally, when I trade, I watch these things, especially on a daily basis. So I kind of know like which swings and which stock is starting to go up and up on higher on counts. And I know that higher the counts get, it has a very good chance that it's gonna get hit hard. And I've showed you a couple of these names, and I can show you hundreds more. That higher the swing is, it has a very, very good chance that um,
Palantir, PLTR.
oh, it's going to be probably another one. Yeah, 17. Oh, this pig is going to get hit hard. Just wait. Just wait. 37.11 right now is waiting to the downside. But now. But this is insane. It's not gonna reach, it's gonna, it has to take out one of the low of the previous swing. And you got the 1, then you got the 2, and then, you know. But stocks like them, like these ones, I mean, they can give me any stock, doesn't matter. It's Uber, just started a new one. Uber has upside. So this trying to settle down in a second swing now. I don't know. There's so many of them. I mean, I'm looking at your SMH 7th swing. Oh, sorry. SMCI, I was gonna do that. fourth swing right now. It needs to 62.95. That's the highest. That's the swing need high needs to break. There's so I mean, again, I mean, if you're gonna start looking at this thing on a weekly time frame, they're gonna be different. Okay, so this is the same fourth swing is coming down here. You see, like they're gonna change. So so time is very important. What time frame do you use? You see, this is a 1, 2, 3, 4. So 1, 2, 3, 4 on a weekly, but on a daily time frame is 4. Now, if I change this thing into Palantir, that's 40, that's 17. That's 1. You know, so the long-term upside on Palantir is in place. There's no doubt. What it's trying to do is trying to retest this high right there. You see? So what is going to happen is that this count that has already been to 17, okay, will come back down, okay, whatever it's going to be, 18, 19, or whatever the swing is going to be. So that time, that 1, 2 that it will start here, it will start the second swing here on a weekly time frame. Okay. And then when the second one will settle in the weekly time frame, then it goes up in a third. So I mean, I don't know your time frame, whatever. Yeah, long-term stock is good, but it will have a dip. It will be due eventually. But this recovery that the stock is making is gonna hit the wall right there. Right there. It's almost there. You know? So in order for you need confirmation, you need to open and close above, like meaning the weekly bar has to open and close above this level, and then from there you can project more upside. But again, I mean, you don't know when you need to see what is your time horizon is, and you invest based on your time window. But weekly, sorry, is good. I'm not worried about that. So this one has, as long as it stays above this low, weekly is fine. Okay. So in the entire move up. So, but this one right there will eventually will settle back down. So I'm not buying this fucking thing. No, I don't even know what did it do or whatever. I know people are crazy about this stock, but I don't even know what business model is this. I like, where's my this? This is what I like to trade. S&P 50 stocks, the top 50 leaders. That's what I like. Tesla is down here. Here's your EMD coming down. Meta, HD, XOM. They're kind of like losing. Google is kind of puking as well. So the ones that are curving out is Amazon, Microsoft, Thermo Fisher, Coke, PG, Merck, Adobe. Adobe just, I don't know, the whole move just faded. It opened the stock 490, went up to 517, and it closed at 474, 494, like 3 points where it opens. Yeah, Qualcomm, you see coming down. Apple, too close to the benchmark. I know it's making new all-time high anyways. Costco, sideways jaw for 6 weeks. J&J looks okay. These are the ones. They already made a little bit of a move because they're already out of the quadrant. PM, Qualcomm is turning down. Netflix is right in the middle, just turning around. Disney, Okay. Walmart is fine. Yeah, Amazon. I would keep two stocks to watch. Is Amazon, Microsoft. The only two stocks right now that I'm interested in. Google, no. Still. Not ready yet. And this big right there. Look at these 50 stocks. And look what Tesla is. Just look at that. There's 50 stocks. Look what Tesla is. Second weakest is a AMD now. AMD is gonna give us the opportunity. That's what I'm gonna take another shot. I'm not very lucky on AMD for some reason. I don't know why. Why I hate this stock. Here, see, it's trying to, see right there? It's weakening. Still got a go signal there. It's only a 5% year to date. And NVIDIA is about 178%. We just looked at it. 178 compared to 5 lousy percent. Think about it for a second. And why you even buy AMD? And they're cousins. Okay, I gotta go. The Formula One just started in Texas. I gotta watch. All right. Have a good day.
Thank you, Mo.
You're welcome.
Bye.
Bye. Give me the remote. Give me the remote.
Why?
Dude, give me the remote. The Formula One is coming.
Let's go downstairs and watch.
But then you